Okay, quick Wednesday morning radar update. So I'm going to do a little bit on sort of news days or noise days as we call them, trading basis. But first I'll just jump through the markets. Yes, we're risk on in the 250 and the small caps. These are the markets where you're going to find your growth stocks. The efficient main market, sort of choppy markets, the FTSE 100, and the leader of Europe, the DAX. The DAX is just pulling back into a normal gap area here. So the DAX coming into this gap area, and it tends to release pressure off the rest of the markets. And you'll see the rest of the markets are breaking out as the DAX came into this little gap area here, which is something you'll see quite a lot. But don't get too lost in that. Just remember, these are the markets what are acting well for the style growth investor of small caps especially and mid caps will do business. These are pretty much not. I mean, the FTSE 100's useless, isn't it, for anyone who trades for price appreciation. So we'll move on from that quickly. Next things to mention is, commodities have just been doing that normal coiling pullback. The dollar's on the floor, but commodities are still pulling in. Ooh, come on, it's pretty normal action. So far, it's over and over again, stocks will trade like stocks, and commodity related has just that extra little poke from the commodity price when you're in commodity related stocks. So we'll move on from that, and then this is pretty interesting as always. I like to watch the TLT. It's a pretty, good average for the bonds. And I'll just do it again, above here. I won't go too far back in history. You remember the screaming and shouting and the news feeds love this stuff, frothy sort of bond market. And then, when TLT's on the floor, interest rates, it's all screaming and shouting, and then off it goes again, and this move here and this move here. Now it's not so much where it's trading, and it is where it's trading, but it's the speed of the move to where it trades. So the speed of the move here, bang, that big move up into that blow off top. And that's if you want to see what blow off top is, I mean, these are continuation gaps, and then bang, bang, that's a blow off move. So in a market like this as well. So we're down here, and it's the speed of this move again. And we kind of noted this bearish sort of bear flag here, and we thought it would come into the 20-month, and it did. And then it's gone over again, and the speed of this move is the one what gets the headlines. So our view, if you've been watching these videos, I say our view, but my view is, it just, it does what it's got to do down here, and it melts back into the range, and it trades its normal sort of mean price most of the time, and we just move on into the future, happily invested in stocks again. So it is what it is, but I'm just trying to just show you the extremes and the froth. And if you watch these things, a few markets you should watch something like TLT, and you'll see how the news reacts to these extremes and how useless it is to what you're actually doing as an investor. Because it's all rear view, isn't it? The future is untold, but and that's the best way you can draw your trend lines as well. Just a big trend channel on ShareScope, and just that will give you the clearest picture of where you are in the mean of the trend. So we'll move on from that. Next up, I'll go into SDI today, because this one's just come out with earnings. Now, it's another saying, trading basis, I always say it, news days are noise days, or the original phrase is news days are usually noise days. So the occasion when it's not a noise day is the game changing report. And these are like hen's teeth, and you know, you don't know that they're going to hold until they're sort of, you know, up 20% or whatever. But at the end of the day, you know, I position on a signal. I trade the signal. If it's a news day, I'll still trade the signal. You know, if it's what I want to own, I will still take the signal. But I avoid buying on news days, chasing news days. You know, I will take a signal on a news day, but I don't buy because it's a news day and I've read the report. It's basically what I'm trying to, you know, drum home there. Sometimes I will buy on a news day and it will bite me on the ass as well. You know, it does happen. The reason it happens is because news days are the most emotional days that the stock has. It's really easy to time stocks on slow days, you know, really boring days. They just melt up. And I'll show you that because, you know, this was SDI, the signal for the swing filter on SDI on this day here, and this was the buy day for this pullback on this day here. And it's really easy to do that. You just buy it. That was the day, and then it happened with Kanos as well, didn't it? You know, really easy. Literally a few days before a big gap up. So really easy to time the market. Stocks will trade like stocks 95% of the time, and then news will punch them around for probably the other 5%. Do not quote me on that, it's not an exact figure. So this was the game-changing move. This was the move it had. You know, I know we're loaded from here and here. I'm loaded from here. We're already up, you know, before this day here, we was up 70% plus. By the end of the week or whenever, we was up 120%, and then it's just going sideways from there. The market knows about this news. The upgrade there was huge. Today, I'll just go through. I've done a little screen grab to tell you why news days are noise days and the best way to approach it. But let's just first talk about the big picture. The market is forward looking. It knew about that news. Is that news game changing to create this kind of action? No. Is that news enough to turn this stock around and stop it trending? Nobody knows. If you make that decision, you discount the right-hand edge totally. You know, if you sell something on value or something like that, you discount the right-hand edge. You know, the stock what you bought on a value case and it moves up because you thought it would move up because it was a great stock. As soon as you sell it, you know, if you're proved right it was a great stock and then you sell it, you're discounting that stock is a great stock. You're going, it was a great stock, but it's not a great no, nothing's changed. So nothing has changed here. The market is looking out the windscreen. It's not looking out the rear view mirror. So next up, what we do is we go, what is out the front window? And sorry, that is my vinyl dealer sending some videos. What's out the front window? Well, huge profit acceleration, earnings per share acceleration, half on half, year on year, turnover, solid turnover, up from about 39 to 40 whatever, but the turnover is decelerating. It was already decelerating. There's nothing wrong with that. You know, I'm going to weight it on, you know, how many boxes it ticks. We don't know where it's going in the future. I'll tell you the best way to sort of deal with that. Have a trailing stop. It will capture more returns by just trailing it and saying if it goes below that trailing stop for my time period, well, I sell it and I move on to the next one, because that will capture more returns. I'll turn that on its head. More money is left on the table by people selling for a reason in their head than a trailing stop will capture. Because if you top slice or you sell your best idea, if you do it on your worst idea, and consistently you do it on all ideas, basically you're going to do it on your best idea as well, and doing it on that best idea will cost you more money than all the clever stuff on the worst ideas. The worst ideas will just bumble around and fade, and you'll sell them at a stop, small winner, small loser, whatever. But you do it on your best idea, it costs you huge. So more money's left on the table by overthinking these situations than just having a methodology. Now I am just going to jump into an intraday, because we did this for CLX yesterday, and it's uncanny how we get exactly the same thing today. So the market trades towards earnings in anticipation. So it's anticipating this great earnings report, and it had a good move up. So you can see the kind of 8%, whatever it was. Where did it close? It closed up 6%, something towards this. Now we get the RNS before today opens, and open interest orders placed in the pre-market. So people read the report. These are the people who read the report and think it's going to act the same as it's acted, and it doesn't make it a bad time to take a position. It just makes it, a lot of people do this. Good reports, it gaps up on the uncrossing trade, and it tends to fade back in and do what it does. And over and over and over again, there'll be a lot of hoo-ha about what happens on this intraday price action. For a longer term investor, it's noise, but I'm just stepping into the noise here to just show you what happens. So even on this pullback here, the market was still up 2% on the lows from yesterday. Back and fill is very normal, but this is basically what happens. The anticipation, the open interest from the people who read the RNSs and chase RNSs, and they put money on the good ones, and I do think it's good process to put orders in. If you work a job, it's use orders. Do not just be signing in and out of your account all the time. But this move here is the chasing of the opening range. Now on news days, sometimes I'll get caught here as well, just putting my trade on, but it's from a consolidation where it suits my sort of reward to risk. So it's not always a bad thing, but you will see this a lot. Chase of the opening range high on adrenaline, fueled by frothy pumpers and news feeds. And you've only got to do a Twitter search in the morning, and the pump on SDI this morning, and all the tick marks and all the bull case, and the pump groups are on it, aren't they? And that they're all patting each other on the back. Don't get caught by these people. Be the person who steps up to the market. You're better to be this person here. Never be this person unless it really, suits your buy day and the reward to risk. You want to be this person 10% of the time maximum. This person here, I'd be happy being that person 100% of the time if I had a job. Just if that's my setup, happy days. But this is what you will see a lot of. The first, what have I got it on here? 15 minutes. So in the first 50, I'll just put it on a 10-minute chart and bring it down a bit more. Oh, it is a 10-minute chart, sorry. So this is the first 10-minute bar. And then this is the second distribution again. Then this is the third distribution. And you can actually put these price range. ShareScope program these for me. Intraday price range. 30-minute range is a good range on small caps. You know, if you're trading a more liquid market, you might be using a 5-minute. You can set them to whatever you want, or a 15-minute. But a 30-minute range is a good range to let post. And if you just let the range post, sometimes you know a stock will go without you. But you know, if you see a lot of open interest and on an average report on something what's already known, you know, you've got a higher chance it's just going to do this. And this is the first buy pressure enters the market as the range posts. The range posted there to the dot. It opened, and the first buy pressure hit the market, and then the second bit of buy pressure, and third bit of buy pressure, fourth bit on above average volume. This one was basically slightly low, but over and over again. You can also download the coloured bars as well. Volume conviction. ShareScope program that for me as well. So there's a code for the price action. There's a code for the volume filter there. So same again. You know, rinse and repeat. And if you go to, I'm just trying to find it. Where's CLX from yesterday? And this one didn't have the run up in anticipation. It just got the post of the earnings, and then it sold down. This was the opening range. I'll put it on a 15-minute, and pumped higher, gap up on anticipation. This is the frothy sort of RNS, chasing the RNS move, and then this is the reality. That's the posting of the first 15 minutes, and then, you know, a little bit of a few buyers entered the market off the opening range, and then it actually faded through the day, and you know, it's just inside day today. It's pretty normal action, you know. The best way to take this is just use it so you know the psychology of what's going on and how the market works. Why do we get this open interest? Why do we get this spike on the open and it fades back in towards the sort of daily pivot or the opening range? Why do we get that over and over and over again? And then why does a lot of hoo-ha about the reasoning why it's going up and down on a 5-minute chart, and then the next day it opens mid bar and just continues trading as a stock would trade, trading towards what it's trading towards. You know, that's what tends to happen. So that is why news days are noise days. And, you know, I would say just take a screen grab of that and just remember next time you step up to the market on a news report, how often, and go and back test how often these gap and goes really do play out. It's usually from, you know, there's usually a lower risk entry follows them anyway, and you know, you might want to put half your position on than your full position on if you chase those things. So that's more of a tutorial video on the opening range and the psychology that creates the noise day. Okay.